Hello, we are live. We've got a few circumstantial snags, so we don't have our other hosts here tonight. Stephen may be joining us a little bit later, but I'm just going to get right into it. We're going to talk a little bit about Propi. Been looking into it a little bit more. I've been paying attention to them as they made it into Oliver Goodenough's report for the Vermont legislature regarding blockchain technology. And they have since made it into recent headlines. Let me share my screen here because you don't really need to look at me. Let's look at some information. And voila. There we go. So this is Propi. Propi.com. You can check them out. Buy and sell unique homes all over the world in Bitcoin. They're obviously set up to do a lot more than that, but that's a good tagline to get them started. This is a great opportunity to really streamline the real estate process. Let's pull up Coinbase and take a look at their CoinDesk. My bad, CoinDesk, and take a look at their article about this. So all kinds of stuff going on. Of course, everybody's worried about the price of Bitcoin. You know, it goes up and down. I wouldn't worry too much about it. Hopefully you bought it because you understand the capacity it has to attain and store value. And that's why we're all in this, to get control of our capital. Let's see. Just search Vermont on here. CoinDesk is a great resource. If you guys haven't spent any time on there, you should definitely check it out. There's actually a whole legislative section in here that has, of course, there it is. Perfect. Vermont City Pilots Land Registry. Registry record with blockchain startup. So that'd be Propi. City of South Burlington. This is a great place to get started here. We really need to be moving forward in this. And as I've been saying to a lot of folks lately, this is really all about governance. We don't need to regulate the blockchain. Blockchain is regulation. That's why it works. It's self-regulated. It can be tweaked. There's all kinds of parameters that can go into play there. But that's what our governance is, right? It's tweaking parameters and trying to get people to act the way we want them to. So it's pretty exciting that we're starting to get onto the same page in terms of utilizing technology for what it's truly capable of. So that's the exciting thing with Propi. I'd like to see, is there any questions? Did I miss anything here? All right. Yes. So yeah, I see Mark on there. Also, just so you know, if anybody wants to jump on, yeah, let's do that actually. Hey, Mark, why don't you hop on here? Because, you know, I don't like talking to myself. There's plenty of these guys out here on YouTube that sit there talking to themselves all day, and for some reason that's just not appealing to me. So let me get some friends in here. That's always fun. First, that. There we go. And yeah, so that's Propi. I wanted to talk a little bit about markets too today. A lot of people ask a lot of questions about, you know, well, how do they come up with the price of Bitcoin? You know, how do they decide what it's worth? You know, it's funny because that "they" is a very ephemeral term. It really is just people out there in the world, and you can really see this is one window. Make sure you guys still following along here. Oh yes, you are. This is one window that you can use to, and you can really see this is one window. Still following along here. Oh yes, you are. This is one window that you can use to, and you can really see this is one window. There we go. Sorry about that, guys. All right. So this is looking at U.S. dollar markets on in this window. You can see Bitfinex, GDAX, Bitstamp, CX.US, Kraken.io, Kraken, HitBTC, and ItBit. You can also go to different currencies and actually go like check out some currencies and see some exchanges that you don't even see working with US dollars. So that's one way that you can look. And here what we are doing, if we go to US dollars and look at, say, GDAX, that's the one that I'm typically paying attention to. And here we are. This is, of course, giving us millibTC. So let's adjust that because that's confusing to everyone. There we go. Normal old $10,819. Hey, Mark, is that you?
Yes. Hi, Ryan. How are you doing?
Good, good. How are you?
I'm okay.
Excellent, excellent. So I think we'll have this. Yeah. So yeah, have you seen this before? Bitcoinity.org. I believe I've shown this maybe in the coworks here.
I think you have. Yeah.
This is so this is actually showing us volume at different points of time over the past month. Each of these bars represent a day, and we're looking at this pricing as it moves along. And then you can really see the difference. You know, right now in this moment, 10,819 versus go over to Kraken, and it might be, look at that, $22 difference. Come over to HitBTC, you know, another difference there. And then CXIO, sometimes you see that one more significant difference, quite a significant difference, $600 difference. Now that's one view. They actually give you a view into other markets on this page too. So you can see volume in the past 30 days. I like to look at the 6-month volume, but then I like to break it back down to a 1-day interval bar. And it really gives you a picture. You can see this is back in September, right, on that big dip. And then we've got some pretty high volume in December as it peaked out at the you know, 19,000 marks. And then we've got recent volume. So we've really kind of had quite a bit less volume as the prices have sort of traded in a sort of a window or sort of a pattern. So Mark, how's things going with OpenWords?
Everything is going well. So just a quick question about what you're showing right now. Do you know if they have an API? I did a little bit of exploring over the past week into that.
Yeah. So Bitcoinity.org, I do not believe that they have their own API. I believe that this site is presented, and I'm not seeing it on the bottom, but I believe it's presented by CoinCap.io API data. So if you go to CoinCap.io, I believe this is the site that actually has an API that many services use to pull data.
CoinCap.
Yeah. And really, this one site actually, so this site has really, you know, your complete listing of currencies. It doesn't have quite as many as CoinMarketCap. CoinMarketCap seems to list them quicker and has a few more. But you'll notice this buy and sell tab on the right on this site. So these buy and sell tabs actually indicate that those coins may be eligible for a sale right on, let me see, is it Shapeshift or Changely? Shapeshift, see, powered by Shapeshift. So this is actually set up to exchange right here. You could exchange really, you know, any of these coins, you know, for some other coin. And you essentially put in the address you want to receive the coin at, the amount that you're looking to be transacting for, you know, a refund address. So if there's some issue with the exchange and it doesn't work, they can send your Litecoin back to you. And then you hit buy, and that's going to pop up that QR code, and you can send the Litecoin in and wait for the exchange to return your BAT tokens or any other token that you'd see listed here. And that's actually essentially it's really a centralized service, but they're sort of moving toward this very decentralized exchange mechanism. But that all goes through Shapeshift. Anyways, I digress.
Yeah, and that's really cool. So I have written up a number of questions, and now I'm looking for APIs and data, and at some point in the near future we'll be testing out some ideas, like whether or not there are leading and lagging exchanges and exchange patterns on price changes. That would certainly be one interesting question. Am I mute? Oh,
Nope,
Ryan, I
you're
think
not mute. I was muted. Somebody, I believe, was trying to call in, and I was trying to let them in. But you can continue.
Oh, yeah. And to answer your question, actually, OpenWords is doing well. I just spoke with the people at the State University System of New York, the OER team there, and they want us to develop a proposal for services. And I'm sure I can talk about that publicly. So we're going to be doing that. And actually, Ryan, the thing that I think you'd be interested in, I might have mentioned it to you directly via email. I did go over the idea of receiving tokens of CureCoin or Folding Coin or Grid Coin in exchange for services rather than US dollars.
Right. So one of the research coins.
Yeah, one of the research coins. And actually they were interested in that. And so it's a good first step. And now we'll explore it in some more detail and hopefully they'll be able to think about whether or not that's plausible for their institutions or not. And also hopefully we can put together a good proposal for developing open educational resources for them.
Excellent. And it sounds like from our conversations, this will, even this whole experience will be great practice for modeling on different scales. If we're talking about trying to do something for, in my case, I'm really interested in doing something for the Vermont educational system, getting OpenWords into the school system as a resource for language learning. So what you're doing with these universities is really laying the groundwork for the future of our educational resources. So it's awesome.
Yeah, that's right. That's right. And if we were successful, let's say with these people, we already have some experience working on Chinese lessons. The teacher that was part of the conversation was a French instructor.
Oh, okay.
And so that would be a really easy copy and paste if we were successful there.
Yeah.
So it could be used by any other French language class, in the country or in the world.
Right. That's awesome.
Yeah.
Awesome.
Mm-hmm.
Hey, Stephen, welcome. Thanks for.
Hey, Ryan. Thanks. Sorry I'm late.
No worries. You're tell me a little bit. We haven't talked a whole lot about the robotic side of what you're into. What are you guys building of late?
Yeah, well, so I mentor and coach a team that's part of the FIRST program. FIRST is for the Inspiration and Recognition of Science and Technology, Foundation for the Inspiration and Recognition of Science and Technology. And this is sort of like the varsity sport of robotics. The kids, it's for kids 14 years and older to graduate high school. They have 6 weeks to build and program and design, build, program, and practice driving a robot that's going to compete in competitions. It's a new game every year. We kicked off the season almost 3 weeks ago now. The kids have been, experimenting with ideas, trying to do designs, discussing them, figuring out what they're going to make. Program teaches hands-on science, technology, engineering, math skills to students. Tonight we were doing a bunch of pretty intensive algebraic and trigonometric stuff to figure out how to size the components of this manipulator arm so that we could use an off-the-shelf piston to actuate it pneumatically.
Cool.
Haven't really found a connection of it to any of the blockchain and crypto stuff yet, but except the programming. I think it's cool that we're teaching kids to program, and they get a great foundation for that with a bunch of libraries that Worcester Polytechnic Institute people have put together to program the robot. and they learned SolidWorks CAD and things like that. But anyway, I was late because we had a kid who was still waiting for his ride that was late to pick him up, and I can't just abandon a kid outside the building after.
Well, yeah, I guess we can't blame you there, you know. But yeah, no, that's awesome. That's awesome. I mean, you know, as far as, you know, sort of thinking about it, I mean, you know, the big conversation in blockchain and robotics has to do with IoT and transactions and being able to have machines, you know, say a car, for instance, that might be charging, you know, at a station or even on the road along the way and have it charging as it goes. But that's the kind of interesting things where, you know, the other thing is accountability, right? Knowing what a robot did exactly. And that's where they're starting to explore things that have to do with blockchain, where you have various devices that are aware of each other. And so not only can you get the reported state from the device in question, but you can get sort of confirmations of state from various surrounding devices. And having that all tagged in an immutable ledger is very valuable.
Well, there's a lot of related stuff, because certainly, you know, the security of a robot is a big thing, and you know, uses all the same, you know, encryption and public key, private key kind of stuff to secure control of a robot. But the other way this ties in actually is that, you know, we're all here because of trying to do things in Vermont to help the economy. And one of the reasons employers don't locate in Vermont, particularly high-tech ones, is they don't have the employment pool of trained workers. So, you know, that's one of the things we really emphasized in a lot of our grant writing to get the money to start this club, was that we're going to be training kids in skills that employers are looking for. And the program's been really successful at that over the years. You know, it's an international program, and there are $50 million in first scholarships available this year to participants to go to you know, colleges.
Awesome.
So it ties into the whole economic development and training a technical workforce thing for Vermont too.
Absolutely. Well, you know, it's interesting. I might have mentioned this last time. I was listening to a reporter on the radio talking about a furniture builder in either northern Mass or northern Pennsylvania. You know, but you know, very historic furniture building, you know, communities. And there's a lot of, you know, woodcraft in southern Vermont too in these areas. But wherever this guy was, basically he was saying that, you know, he was seeing how, you know, yeah, potentially robotics could be replacing somebody's jobs, but more importantly to him, he can't find people that want to take up the jobs that he has. And so him getting robotics in there that helps make the job easier or more efficient and increase productivity also attracts a young worker who's interested in learning something like how to work with a robot, you know, training the robot. And how does a robot learn how to do something? The person who does the job figures out how to translate what they do into what the robot does, and sort of, you know, so then you have that person who sort of knows how to program the robot. And so eventually, of course, that still gets worked out, right? Robotics and AI. I was just reading something about, you know, a robot just wrote some, or an AI just wrote some AI software. So now there's an AI child software.
Yeah. Did you hear that? I saw headlines on, I don't know, one of the news services I was looking at that said that some conspiracy theorists now have a theory that it was an AI that developed Bitcoin, right? Satoshi Nakamoto was an AI.
Yes, yeah, I think I saw that one not long ago. Yeah, there's lots of theories out there, but you know, the fact remains that it's verifiable open source software. There's lots of eyes and heads that have peered into it and sort of picked it apart and analyzed it, and sort of the baseline fundamentals of how it works are pretty well apparent. And
it's got one of the biggest bug bounties, you know, well, the biggest bug bounty ever, right?
Yeah, exactly. Yeah,
if you can find an exploit, you know.
Right. Yeah. What are we at? 300 billion for, you know, 200 billion for Bitcoin. It's
I don't know what the market cap is.
I think we creeped under 200 billion again. We're 183. There it is on the volume weighted average price.
Yeah. So talk about the week's action there.
Yeah, let's talk about the week's action. I was just popping up. Go back to the charts here. Actually, do you have any cool graphics to display, or I'll just pop up my screen?
No, I don't actually. I mean, I published a an article describing the model I'd been showing on this channel.
So I read your article. I thought it was excellent. I didn't get a chance to give you feedback before you published it, I think, but you want to share us a little bit about that whole?
Yeah. So, there's a fellow named Mario he's a lawyer and a master's degree computer scientist. And he's developing a blockchain solution right here in Vermont. And he said, when we were at a Breakfast Club meeting, and he said, "Oh man, you got to get that thing out there. You got to post it on Medium.com." And I don't know the space. I don't follow many bloggers or anything. And Roger was saying, get it out to all the bloggers. I still haven't publicized it to them, but I posted on Medium.com. I tweeted it, put it on my LinkedIn profile, and I'm not very active in social media. When I put an article that I think is a really good article on LinkedIn, maybe I get 7 to 10 or 12 people who look at it and give it a thumbs up or something.
Yeah.
We had within the first 24 hours, 1,200 views and an estimate of over 300 reads of that article on Medium.
Nice.
Which, talking to a media guy who has the office across the hall from me in this building, he said, "Oh man," I was excited. I was like, "Wow, 1,200 views, that's more than I've had on anything I've written before." And he said, "Dude, if you're on Medium, you should be getting like 1 million." So that kind of took but it got some interest because my LinkedIn searches went from like 35 the previous day to 350 the next day.
Yep.
So I know people were taking notice, and then I actually got a LinkedIn request to connect from a CoinDesk reporter today. So I accepted that request. I haven't heard from him, so I don't know what if he's planning on doing anything with the article or had any questions about it yet. But
cool.
Getting a little bit of attention anyway. And what I was surprised was I thought, I usually hold myself to a really high standard of research and understanding the background literature and everything else that's been done before. And I expected that being done somewhat in a vacuum, of not having compared notes with any people in finance, that I would get a lot of comments and a lot of pushback and a lot of people telling me, this is what you did wrong, this is why you're crazy, whatever.
Right.
And I haven't seen anything. I saw.
Hello? Oh, did we lose you?
One guy asked a really good question, which was, why does your data start at 2016 when Bitcoin's been around so much longer? And the answer to that is that the model rests on a sort of chain of logic that includes an assumption that there's a fixed supply. If there's not a fixed supply, the adoption rate will not be reflected in the price by way of the demand curve. And in the early days of Bitcoin, obviously there wasn't a fixed supply. The rate of Bitcoin production was quite large relative to the amount in existence. And also there wasn't enough of it being traded on enough markets to have sufficient volume and liquidity that there wasn't a lot of noise in the signal. So I went back and checked it out, tried to get data from other exchanges than the Poloniex that I did the model with to begin with, and found that until it hit about 5 billion in market cap, there was really no clear trend emerging, and it was pretty noisy and spurious signal. So it just happened to coincide that Poloniex only carried price history back to late 2015, and so that's the data set that I had access to when I built the model. But it turns out that prior to that, the data wasn't very useful anyway. So.
Gotcha. Yeah. Well, actually, it's interesting because I was just reading another article about how there was apparently one person responsible for 2 bots that were essentially responsible for the driving up of the price in 2013. And so you could kind of shave out a bunch of data, maybe correlated with those bots, and find a more accurate set of correlations if possible. But apparently it was one person in 2013 that was in control of these 2 bots that may or may not have even bought actual Bitcoin. This may be part of the whole, empty Gox, fraud or embezzlement or whatever occurred there, that precipitated that whole drive up in price. Which, you know, brings us back to what's been going on. So let's look at the more recent 24-hour period. So, yeah, there's there's this struggle. It seems like there's the market wants to go down and wants to go down, and it's it's definitely hanging low from where it was. But what are we back to? We're at a 60-day low or a 45-day low now. That's 60-day, I think, right? Yeah. So we're not exactly that far off.
Yeah. So what date are you?
Is my screen up? Yeah.
Yeah. Okay. You're Bitcoin T. I just wondering if they average a number of exchanges or what they do to get that.
Yeah, in fact, I believe if I go down here, you can see, here's all the exchanges that they're pulling. So quite a few. Pretty much any of the exchanges they can get a decent API feed from, it looks like.
Yeah, so I got to tell you, after the low on Saturday, I mean on Wednesday, the 17th.
Yep.
That was, kind of right on the line of my model, which I'll pull up and
Right. Oh yeah.
and share in a minute here.
There we go. Yep. There's the 17th right there.
Back, and then it came back down pretty near that, right?
Yeah.
And I got thinking, oh no, is this going to invalidate my model? But it hasn't actually.
Yeah, it's actually stayed right. I mean, just barely in line there to not invalidate it. But in order for it to stay within your model at this point, now we're against the clock, right? Because if it kind of keeps hanging in this range and does this range bound thing, then
right, time will just bring it across the line.
So, what is this? Is it the banking cabal playing their games, or are we the friction between the different players? I mean, there's certainly a lot of Bitcoin hodlers out there. I mean, that's a cultural thing, especially the Bitcoin maximalists. But to what extent have they traded? Have they traded these levels? And I look at some of the volume correlations, and it looks like, let's see, if we go back 6 months, and if we look at with the day volume on there, daily volume. Yeah, so this is interesting. I'm having a hard time wrapping my head around this. If I look at this, September 14th, this shows relatively small volume compared to over here, right? But this is measuring that volume in dollars, right? But if we go back to just trading volume in 6 months and day, we look and see that if you go back to September 14th, measuring in Bitcoin, we're actually trading less volume of Bitcoin. It's kind of an interesting piece of data. So, because all of these models, have a big factor is the 21 million cap, right? Bitcoin has a limited supply. And so it's interesting that we're seeing the price decline right now, but we're also seeing less coin traded, which to me, maybe I'm just reading into it the way I want to see it, but it kind of reads to me like people that might have owned Bitcoin that want to manipulate it in a bearish way, they've got to get in every time they want to do that. And then they've got to play their games and they've got to get out at some point. They've got to pull the trigger, and they're taking a chance. They're gambling, right? And so if you see this volume get bought up, but it hasn't necessarily all been traded or sold, that indicates a portion that's been held. And so is that new holders? Quite possibly. And that might be an indicator of, that might be something that would inform our growth pattern as we try to work it out. 39.1. I want to see total. Oh yeah, it's the 561,000 Bitcoin, and this is 540,000 Bitcoin. So it's interesting. Again, there's only so much to go around, and more people are becoming aware of this and starting to understand how it can be used as an uncorrelated asset to hedge against other market factors. So any new projects we've been looking at? Let's see. What have we come across lately? So 269 will be in the State House tomorrow, discussing 269 in the morning, and hopefully listening in. I plan to be fly on the wall in the State House to see who responds to what and who might have questions, and hopefully offer up a resource to our legislators to learn a little bit more about blockchain technology after they've heard Oliver's testimony.
Yeah, and we had some other exciting stuff in our very own state with Town South Burlington, right? You shared the news with me earlier.
Yes, yeah, we actually discussed that briefly earlier before Mark got on. But yeah, no, Propi is piloting the titling and the real estate project in Vermont. So next, we need to start the Vermont Digital Currency Initiative, and from there, I think we can really start to drive more and more to this forward and start to interlink these different sectors in Vermont and kind of get everybody on the same page. So let's see. I think
so. A couple of other interesting things happened this week in the news.
Mm-hmm.
One was a report that of some people that are analyzing the blockchain for money laundering activity.
Oh yeah.
And they concluded that, first of all, money launderers are moving away from Bitcoin.
Right. Yeah.
Because they're figuring out how traceable it is, right? And we've talked
Right.
about that. We should go the former FBI or federal prosecutor who talks about that on TED Talk. And second thing is that roughly only 1% of recent Bitcoin transactions have any, are suspected of being money laundering. So the headlines that you keep hearing about, it's only for criminals and drug dealers and money launderers. Well, they seem to make up only 1% of the transactions on the Bitcoin blockchain, according to this analysis of it.
Interesting.
So I'm trying to find the original article so I can cite the publishers.
Yeah, I think I remember hearing that, less than 1%. And then I read something else, an article that was saying something like 25% of Bitcoin users are associated with criminal activity. But that makes me think, like, are you talking about like like to what extent do you define criminal activity, first of all?
Yeah, right. Are you in a state that still outlaws it?
Right. But then you also have like people that, like you just said, people that maybe think that somehow it's underground or something like that people are just learning. But you can find podcasts. I'm trying to think of Bad Crypto maybe is one of the podcasts. There's a few of them out there. If you go to Crypto Minded, that's a good website for just some resources. They have some podcasts, and one of them, they were talking to a transvestite prostitute, right, in California, I guess, was where she spent most of her time, and basically just describing the lifestyle that they survived or depended on Bitcoin. That was their way of transacting and sort of getting by. And if there was $10 left over, $20 left over, like she didn't have a bank account, she couldn't go get a bank account, and so
be unbanked.
Yeah, she was banked that way, and potentially, and even when Bitcoin was volatile and going up and down, whatever, like it still functioned for that person. So it's kind of interesting how it was sort of this codependency. But anyways, yeah, it's not very good for criminal use. It's really, the whole point is to suck the bankers in, which we're doing, and force them to play their games on an open ledger. right? I mean, that's kind of what it's all about. It's like there's no insider trading if it's all on an open book. And even if you don't know who's doing what, and supposedly, somebody might be making a trade or something while the rest of the public doesn't know about something. At the end of the day, that's what a market is. A market is a free-for-all. People move this way and that, and eventually when enough people are in this market, it'll settle out because it'll have enough diversity to stabilize. But until then, we're going to see some mighty waves. And I do like, shout out to Rogers, wave theory, talking about the tsunami coming. And I think he's definitely right. I mean, I think we saw it really with the first couple of waves where there was this real sort of retreat, after, April, May last year, the price of Bitcoin really kind of retreated for a while before it surged in July. And it kind of does this, retreat and surge.
Well, right. I mean, if you just look at the model that I have on the screen,
yeah. Oh, am I?
You can see the waves, right? This is a log plot, so it kind of.
Oh, right.
Even
Yeah.
if it's increasing, by a certain percentage each time, it's showing them the same size. And the last wave was, it was preceded by a slightly smaller wave in log space, right?
Yeah.
And then I don't think my screen is showing. But it was then, December was a huge wave, right? So
Right.
It's followed by a huge crash, right? When a huge wave comes up on the beach.
Yep. Oh, yeah.
Moves a lot of sand. Yeah, so interesting idea, though. I've been thinking a little bit about all the market cap that's gaining here and the people who are like become the Bitcoin billionaires. And it kind of struck me that the only I shouldn't say the only that people who are, quote, getting rich or have gotten rich are really getting rich by money leaving other people and coming to them, right? I mean, assuming they cash out, they're rich on paper,
right,
with their holdings at the current market cap, which is a reflection of supply and demand. It's not the amount of money actually in the space, right? The space that if everyone started selling and left, market cap would drop by way more than the amount of actual money coming out.
right.
Just like it rises by way more than the actual amount of money going in.
Sure. Yep.
Because, and I guess maybe for people for whom that's a new concept. I mean, imagine that there's all these people holding all this Bitcoin that they bought for $1, and all of a sudden there's a transaction that places the value at $10. Now suddenly all those people's Bitcoin they bought for $1 is worth $10, right? So you can see how.
Well, that's you've seen these altcoins. When you see an altcoin that has like $1 million market cap, and if you're holding on to $100 worth, and all of a sudden like $8,000 worth of volume goes through, and it shoots the value up to $200 a coin, market cap explodes overnight, and then it goes
that doesn't
back.
mean there's that much money in the market.
Exactly.
Right. I just want to be clear for anybody who doesn't get that concept yet.
Sure.
Because that was new to me, honestly, a couple of weeks ago. So.
Yeah. Yep. Well, actually, to illustrate that point, let's take a quick look at.
Like I said, I thought it through. To be obvious, in retrospect, it is, but.
Sure. Well, yeah. So on the one hand, that's why I always like cringe when anybody just starts talking about like looking for ICOs to invest in, because so many of these, no matter how good a project they are, you never know what could happen, just like a stock or any other investment. And the reality is that they simply don't have the liquidity to get out of them. And that's kind of the way Bitcoin is too, in a sense, considering there's a $180 billion market cap sitting there. But that said, there's still a $9.4 billion daily volume, right? And there's not such an excess demand to get in or out of Bitcoin to really like tank that market. But if you're looking at a much more obscure coin and you're trading all these altcoins and you're looking at things like this where you've got a $3 million daily volume and it's on a couple of more obscure exchanges that are a little harder to connect with, and maybe a little harder to actually get your currency out. You got to swap this for Ether or US dollars. I mean, Ether or Bitcoin to get it into US dollars on some other exchange. And you get deep into the market, you lose liquidity very fast. So you only got 3 million of liquidity there at any given moment. And that volume's gone up significantly. Now I'm pointing this out because this is kind of a very interesting dragon chain. I've been watching this. I would buy it probably if it was more easily accessible, but I don't. It's on exchanges I don't feel like dealing with right now, like Ether Delta. I just don't really feel like dealing with Ether Delta. And look at that, 200,000 in volume. So as far as any kind of significant investment there, you got to be really leery of how much liquidity is actually there to get back out of your investment. There's only 200,000 volume in a given day in a full 24-hour period. Then just speculating here, you'd only have like 10 or 20,000 on the book at one given time, right? So if you got $10,000 invested and you want to sell $10,000, you're probably going to watch your price swing from 238 down to like $1.10 just in your one market transaction. Depends, of course, how the book's laid out, but to illustrate the book, actually, that's where Bitcoinity is. Go back there, a great tool because they have some cool data tools as we were looking at before. If you can go to Combine Order Book, and this order book is actually again not all markets, but a bunch of significant markets around the world.
Wow. That is a handy resource.
Yeah, I look at this all the time. Past year and a half, basically, as I've learned to analyze charts and try to figure out if I can make a trade that's profitable. Don't be greedy, just buy and hold. So yeah, you can look at the price change. So to change the price of Bitcoin 10%, look at that. Ooh, that's interesting. Someone would have to sell 4,167 Bitcoin, let's call it 4,200, on Bitfinex to drop the price 10%. And then each of these exchanges. And so you can see, obviously, if someone starts to drop the price on one exchange, people that are serious and they have this money sitting on these exchanges and these order books are watching that, right? They're paying attention to that, probably. And they move, they cancel their orders, they move their orders. So that's why you see this in real time changing all the time. But you can see some of these thin exchanges, and this is where there's opportunity for like real manipulative arbitrage. Like XMO consistently sits at a higher price. Forget what the last one was, about $600 difference between the price on XMO versus the price on GDAX. But look at how thin the market is, right? So great, you could sell your Bitcoin for $600 more, but why is that? Well, that's because if there's other things traded on the XMO, in order for somebody to get their asset off of XMO, they're probably transferring that asset away from XMO somewhere else, if they're a U.S. resident especially, because they're not connecting their bank account with XMO. So people convert to another, they trade, one currency, and then they exit the exchange in Bitcoin to get to another exchange to take profit. But if you want to sell a bunch of Bitcoin or, at that price, you're going to drive the price down real fast because there's not a whole lot of liquidity there. What would it take? 33? Is that what this says? It's hard to read. 33, I think.
I just experienced that last night on Poloniex. I forgot what pair I was trading, but I saw an opportunity to buy something.
Yeah.
And the size of my order was pretty large relative to the order book, right? I looked at the order book and said, well, what price does it have to go to before my order gets filled?
Right. Yeah.
So what I did is I placed like four orders as smaller orders, accepting the new price. And by the time I placed like the second and third one, I didn't look at what the overall volume on the market was, but it had to be very small. The order book started shifting because of my very, fairly small amount of buying.
Yep.
Yeah, it was kind of interesting. So, I might have actually started moving the market mildly.
Yeah. Well, it's interesting. You can see that even on GDAX, even in the Bitcoin market. If you're placing and removing orders strategically, even or not strategically, like if you just start placing them, you can see, if you're really paying attention, you can see market reactions as they happen. And it's hard to tell what's a reaction, what's not, but you just see the movements. And yeah, especially if you get into a thin market, you can really see it. But even in the Bitcoin market, it's if you're putting a, not too big of an order in there, you can see reactions in the market.
Yeah, I think it was Namecoin, right? So,
Oh, yep.
and I was moving like, I don't know, about 100 Namecoin, and I saw, the orders though, average order size is like, I shouldn't say average. I'm looking at orders on, right around the current price on Poloniex at the moment.
Yeah.
It's like 0.33, 1.7, 5.9, 1.7, 11.7. So if I'm going to go try to buy 100 Namecoin in that kind of market, I'm going to be burning through a lot of sell orders.
Right. Yeah, it looks like a total volume of 55,000 on Poloniex of Namecoin.
Yeah, so it's a pretty small market there.
Right. Yeah, those markets. So, well, I think that's we might actually wrap this up in an hour today. This is. Do we have any questions from the audience here? Let's see. What's on the agenda tomorrow? We'll be in the State House in the morning, early morning. I'll be up there with Seth, and I believe there's going to be a handful of others there meeting us. Roger's got his breakfast club there. So we're going to make a presence known in the State House. If there's any entrepreneurs out there, or anybody that can, make a referral to someone that might be able to show up, it'd be great just to, add to the conversation. And then in the lunchtime, we'll be in the lunchroom conversing with hopefully some senators and legislators on their lunch break. And then we'll be heading back down. I'll be down here to the coworks for the meet and greet, talk about Bitcoin, crypto, and other things entrepreneurial in the White River cowork space here. And let's see, what else? We are looking for other folks that want to host us in their town. So I can go sit down. I'll go to the Optimist in a couple of weeks. That'll be up there in Woodstock, meeting up a few folks up there to talk about blockchain and what it means for governance and identity and maybe supply chain transparency, various social impact interests of the
so there was a couple other things, Ryan. Sorry, you said what else?
No, go ahead.
I'll jump in before I forget, because I often want to have an idea, the eyes of loneliness quickly, right? Interesting article almost a week ago now, New York Times, called "Beyond the Bitcoin Bubble." Did you get it? Did you see it?
I don't remember if I read that one.
So this jumped in and it talked really about, it had a pretty good explanation. It's a very long article, but it started with a good explanation of the author's account of him creating a wallet and, putting a bunch of 6-letter words together and having them go through a hash and come up with a private key, and then having go through another couple hashes and come up with an address. And so it was kind of neat in that it walked people through that, like what it takes to get involved and to transact personally with other people. Then he went through sort of what the implications are for currency only in terms of person-to-person transaction, and he compared it to doing, intermediated with a credit card company or a bank and whatever. And he was pretty much extolling the virtues there. And then he got into the underlying blockchain technology and all the things that all the hopes that people have, and what the problems with internet, 1 and 2 were basically, or web 1 and 2. And then he covered a lot of projects that are going on, particularly in the area of identity and social media and owning your own data. And it was really a sweeping, I think, overview of the space, because he covered sort of some of the problems with current identity things. Like Facebook has 2 billion subscribers. And for all intents and purposes, your online identity is something like your Facebook profile, right? They have all your photographs, video, everything you tell to other people and hear from other people, where you were born, who your friends are, what high school you went to. And it's an attention economy, and this is kind of an aside, but if you think about where we are right now with, anxiety and depression with teens, with people's fragmented attention and not being able to, like you were talking about, hiring people who don't even want good jobs now.
Right.
And part of that is that I think that people can't handle the the lack of what am I trying to say? The boredom of a steady job, right? Because they are addicted to this constant dopamine shot that the technology
Weird.
has gotten them accustomed to with attention. But when you think about what drives that model, right, it's advertising revenue. That's why they need your attention on all the time, and that's why they own your data and sell your data.
Mhm.
And so the implications of owning your own data and unlocking them with your own private keys and having that distributed over a distributed file system throughout the globe, just in terms of what it can do for anxiety, depression, and attention span and cognitive function, that are all casualties of the current paradigm of not having built the internet to begin with to deal with that data in a secure and democratic fashion, right?
Yeah. Well, we had a bottom line to take care of.
Right.
But now,
so anyway, that article, the title, if anybody's going to Google it, it's on the New York Times.
I'm actually, I was
And
going
it
to
was
do it
called
right
Beyond
now.
the Bitcoin Bubble. Really interesting article.
Yeah, I'm
And,
sure.
it treats it all like the cryptocurrencies are all going to, it's a bubble. All the money could evaporate. But what's left afterwards was the important piece of that
Right.
article. Right? So whether or not
Yeah, the question is, do we
with
need
the
to
first
buy all
part.
the Bitcoin to fund it, or will the or will the powers that be sort of recognize and embrace the technology?
Well, they already are, right?
Yeah, I say
And people who are, sort of in the conventional space that are really going great guns to kind of wed like the securities markets with the blockchain technology are like T0, right? By the founder of Overstock. And that was interesting because he was getting ready to sell the retail. That's Patrick, what is it, Patrick Byrne?
Yeah.
He was getting ready to sell the retail business of Overstock, right? Because they've been dabbling in all these blockchain solutions, and they created this company called Medici, and they teamed up with this DeSoto, and they're doing they're doing like a securities exchange for on blockchain, basically driven by blockchain. He announced like day before yesterday that he's been rethinking, maybe I shouldn't sell Overstock because of the fact that Overstock's acceptance of cryptocurrencies as a payment mechanism is useful to the overall model of bridging, those two worlds, right? And driving the thinking about cryptocurrency more into a mainstream utility way of considering it.
Right. Yeah. Yeah. I mean, I think that's it's hard because it's sort of all lumped into one thing right now, right? Like everybody sort of sees it as one thing, but Bitcoin is one thing, the blockchain is another thing, the software underlying it, whether it's open source or some of these new solutions that are still proprietary, is a whole other aspect of this. It's a deep, complicated rabbit hole, really, because I think I'm truly an advocate of open source technology. I think that open sourcing software and information is really the way to solve problems, right? We all get further along if we collaborate. Now, there's certainly room for sort of competitive implementation, but the reality is that we're all still going to compete for our own experience, but we can all share from the same library. And that's a big piece or a big component to what drives the value of Bitcoin is the underlying perpetuation of the open source capacity to enable a democratic solution, or essentially everybody can agree to something and simply it is. They don't have to necessarily go through some other authority to give them permission to operate in a certain fashion. So it's it's interesting to watch, and I think that there's a lot to. I think there's going to be a lot of upside in the next couple of years because, again, it acts as an uncorrelated asset. It's a hedge and it's a tool that can be leveraged against other parts of the market. And right now, it's all being used alongside of propaganda tools and the sort of information warfare that's out there. And It's having a very, very small impact on the market right now as a whole, as the total economy, but it's potentially going to have a much greater impact as it grows, and hopefully that impact will be to empower people. But the key, I think, is for people to be stopped and reminded consistently what that the bottom line is. Not the single bottom line. The bottom line is, what are we doing for each other? Where are we creating value in these token systems? So we posted the links. I just want to check. I think I reposted the Medium link out there so everybody can get that. Hopefully that's working. And yeah, and the New York Times link. Awesome. Well, I think it's a good time to wrap it up. Let's make this a short one tonight. Does anybody have any other specific comments or questions, or we could always make a list of some topics for next Tuesday as well. Awesome.
No, I'm sure there'll be more news to share next Tuesday.
Yes, lots more news. I would not be surprised if, yeah, well, I won't make any predictions or anything, but let's just say we're probably on the right side of the wave at this point, judging from some of those volume numbers.
So we'll see if my theory is disproved.
Right.
You can never really prove a theory. You can only disprove it, right?
Yeah. I did want to mention something. So we talked a little bit about an article about the futures. And it was a rather one-sided article. It appeared it was really kind of biased. It described futures well, but I don't know if I can pull it up quick enough. But it basically was describing this sort of scenario of the futures being used to.
Yeah, so it was a Reddit post by someone who was not a sort of latecomer to the crypto world, but who's familiar with futures trading and hedge funds and how prices are manipulated. And they outlined one scenario, just one, by which Bitcoin price could be manipulated. And then I got a lot of pushback on Reddit from a lot of people who had other ideas about it, right?
Yeah.
So just to set the stage, I mean, I think you have some.
Yeah. Well, yeah. So the whole point to that was that the one thing that the article really missed was that all of these markets, and it's kind of where I was going with this whole part of this hour talking about these markets, is that they're very diverse, right? We saw all these different exchanges. They all have different markets with US dollars, with other currencies, with other tokens. And at the end of the day, that's all just what we can see, right? You and I and everybody here could all have our own individual arrangements to buy and sell or trade coins. In fact, it's interesting too, because Vermont does have virtual currency listed in our state law, but there's some interesting precedent. I had some great conversations with an attorney today. So there's some interesting precedents that really could potentially be protecting our rights to be transacting with coins without any real interference. And those dark books is what they're called. Essentially, people that keep track of a list of individuals that are willing to buy or willing to sell a certain amount of Bitcoin or other currency, and those people are called OTC traders. They run what's called a trade desk, and they handle someone who wants to make a purchase or a sale without heavily influencing the market. Or maybe they do want to influence the market, and they're gonna try to coordinate a market influencing transaction with some other transaction in order to make sure that they capitalize on it. So the whole thing about futures being new, again, this is something that I have to kind of stress to people, is that futures as done by the CBOE and the CME and LedgerX and all these people that are playing the Wall Street game, that is new. But futures trading and not naked trading in the Bitcoin markets and other crypto markets is not new. It's been happening from the beginning since some of the more sophisticated exchanges started coming out. And so there's already these pressures and counter pressures and probably inside trades and manipulations. Magner, I have some heavy suspicion that, they have some visibility into markets that gives them some opportunity for inside trades, and whether they take advantage of them or somebody does, I wouldn't be surprised. But all of those things are the components of a free market. You can call it insider trading if you want. That just makes it sound bad. And though it may be bad in our regulated markets, I'm not going to argue one way or the other on that. It is part of a free market, right? And so if we try to restrict it, we're just going to create a vacuum somewhere. So what we really need to do is learn to observe this market, learn to recognize all these various influences that take their place in it, and adjust accordingly, right? I still personally am vested because I think there's huge upside, and I think there's a lot of potential to use it as a capital resource. But there's lots of information out there, and it's always changing. And at some point, that may be different.
So I think your point is that, so this person was arguing that until there's more regulation of the exchanges to suppress the type of manipulation that they were suggesting could occur, that people were going to be susceptible to it, and that person wasn't aware, obviously, of the dark trading that occurs, and someone pointed out, hey, here's the announcement on Kraken's blog about they're opening a dark trading desk. Public announcement, write to us if you trade volumes over 100 Bitcoin, we'll do dark trading for you, right? Yep. So that's the free market. Caveat emptor, go read the blogs, right?
If you want to buy or sell $30 million worth of coin, you do it through a dark market, because you don't want to pay the slippage. Right, you don't want to pay the extra price that goes
up on an order book either. I mean, unless you're going to place a bazillion small little orders over time.
Right. Yeah, and then you employ some kind of bot to do it. And essentially, I wouldn't be surprised if some of the exchanges offer a service like that, where they say, okay, well, and they know roughly what they can do, right? They know what their bot can handle. They know what their order makers can handle, and they'll negotiate a trade. Well, we can do that. It'll be about, we'll probably see a 8% slippage, and they'll set it whatever the deal is. But that's the real world, right? That's how, we're talking 1800s, right? Moving gold around, moving assets around, 1900s. All these conversations all happened behind closed doors. Every trade was an insider trade. It's all going to happen.
Well, insider is the market. I wouldn't agree with that word. They're obscure trades, right?
Right.
But insider is when you know something that's going to affect the health of your security, right?
Exactly.
You act on that information before the average person can. And I guess in that case, we know we're manipulating the market, and we're acting on that before the average trader can. But
right. But my point is that this term insider trading is getting thrown around a lot, and I think that was sort of the idea that was being presented by that. Was they were talking about they were illustrating this idea of traders buying futures and then also conducting some sort of backdoor trade that would be like an insider trade. And ultimately, it's just what you're saying. It's an obscure trade. It's not really an insider trade because it's Bitcoin. It's not regulated. Buying or selling Bitcoin on the open market is not an insider move in any way. There's no way it can be an insider move. There could be something that that other people don't, but that doesn't make it an insider move. It's not something that's illegal for you to take advantage of. So anyways, that's my rant on that. I'm still obviously bullish on Bitcoin. I think that people should continue to get educated and learn how to use this asset for their own benefit, and learn how to use money to their own benefit. So look for us, connect with us. We'll talk to you again soon. I'm going to disconnect this, and you all have a great night. Thank you for joining us.